You ready? You got me running, got me running. Raise your hands up. Raise them up.
All right, welcome to the Forex Trading Asia Daily Currency Call, episode 287. So today is the 10th of May, 11 a.m. GMT plus 8 Singapore time. So yeah, this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. Here, we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, so Friday was the release of the US NFP data. So I'm going to get Kim Hong here, Kim Hong, currency analyst at LCMS Traders, to give us a summary of that news release. Kim Hong.
Okay, thank you very much, Junwei. Well, NFP was really a straightforward down for the US dollar, all right? Okay, it really took everyone unprepared, okay? The result was really way far from expected, okay? So in April, okay, the number of jobs being added into the economy, the US economy, was 266,000 jobs, okay? However, there was a forecast of 990,000 jobs being added. Okay, this is obviously a big difference between what happened actually, okay, what happened in reality and what was being expected. Okay, now what actually caused this big difference in the number of jobs being added? Okay, analysts says that well, there is a huge demand for workers. Okay, it means there are many people out there looking for jobs. However, there is a low supply of jobs. Okay, as you guys know that there has been a shortage of supplies in the construction and other sectors as well recently. So that may very well be the main reason behind why we are seeing a big difference in what's been expected and what actually turns out. Okay, now if that is not bad enough, the data for March, okay, the NFP data for March was also revised downwards from 916,000 jobs to 770,000 jobs, okay? So what this means is that, you know, in last month, there was actually an overestimation of a number of jobs being added. So that actually sends the US dollar, well, I wouldn't say crashing, but it actually weakened against the other major currencies across the board, okay? Now, well, I would say that not all is lost, okay? However, okay, if you look at the report, we will realize that the leisure and hospitality industry, okay, continue to have the biggest hiring gains, okay? What this means is that in April, okay, the number of jobs being added in the hospitality and leisure sector actually increased by 331,000 jobs. So I believe we are actually seeing a strong impact, okay, on the resumption of economic activities, okay, due to the speedy vaccination program in the States. So this actually gives the economy the confidence, you know, the people, the different sectors in the US, okay, business sectors in the US, the confidence to actually open up their businesses, okay? Then unemployment rate, however, inched upwards, okay, as opposed to the expected decline. But this was only a 0.1% increase in unemployment rate. So it's not that much of a concern as of right now, all right? So with this jobs report, we will actually be seeing, well, we have already seen a weakening in the US dollar. So my take is that it may actually last for a short period of time, okay? But in the long run, well, as I said, that the vaccination program has been going well, the number of cases, COVID cases has been dropping. We may actually be seeing a recovery in the medium to long term of the US dollar. Okay, that's all I have today for you guys. Thank you.
Thanks for that, Kim Hong. All right, so right now I'll get Scott here, Scott Andrews from Forex Briefcase Australia, to share his outlook on the dollar index. Scott.
All right, thanks very much. And hi, guys. Hope everyone had a good weekend. So like Kim Hong mentioned as well, US dollar, I guess what we saw was, the NFP result was much lower than expected. But again, like Kim Hong went into the details of things with expectancy is probably going to be that, the US economy does return quicker than anticipated. But, currently right now, what we're looking at is that it is approaching 90 flat here with the charts here, thanks to Sam Trade. So, what I'm looking for is that we do have some data out this week. We've got our US CPIs out as well. We also have on Wednesday evening, we've got the 10-year Treasury note auctions as well. So what I'm looking at here is that we had one piece of data that was much worse than expected. Everything else is looking like we're sort of returning back to normal. And I guess it depends on what you're doing in the markets. But, right now, I would say let things be digested in regards to the information that's come out. And, what we are seeing is that the reasoning behind this really seems to suggest that it's like in Australia where we had some favorable unemployment benefits. This could be another reason as well, where there are certain individuals in the US that are just maybe taking advantage of this situation and be like, well, we don't need to go back to work because we're getting these benefits. But that will be identified, and I guess those people will, have to be accountable, and we'll see things, just the jobs that are available will be taken up as well. So in regards to a trade idea, I just like to see, what happens in regards to Wednesday. So I'm thinking that we're just going to be range bound. We might see it get just below, 90 or so on the index. But again, I'm definitely long biased. It would be aggressive to get in before the information that comes out on Wednesday night at around 8:30 Singapore time. So I'm just standing by for now, and stay tuned for Jin's thoughts on the Aussie and the Kiwi, but just standing by for now with the trade on the US dollar.
All right, thanks for that, Scott. So let's get into the currency in focus today, which is the Aussie and Kiwi. So we have Jin Dao Tai here, founder of LCMS Traders, a multi-million-dollar trader trading an account with more than $14 million on a daily basis. All right, Jin, I'll pass the time to you now for the Aussie and Kiwi currency call.
All right, good morning. So it is the brand new week. As on Monday, we look at the Aussie dollar and the Kiwi dollar. Like Kim Hong was just sharing with you all, showing you the chart or the news here. The US non-farm payrolls last Friday came out at 266K, was expected to be 978. So massive upset here on the US non-farm payrolls. Unemployment rate also going expected 5.8%, came out at 6.1. So again, another big miss there. Average hourly earnings did jump to 0.7% with the expected 0.1. So why this big upset? There are several reasons. It could be because the benefits of being unemployed became so much greater or almost comparable to being employed. So it probably temporarily discouraged people to go look out for new jobs or to go get hired. It probably gave them the reason not to, or to delay that employment. So, or that seeking for the employment. So what this actually could mean is that this dollar weakness might be short term, like Scott was just sharing. We've seen the US dollar react to this, but this might be short term. We've been talking about it all week with that big expectation for good US news. Market had been pricing it in that we're going to see very good numbers. We're talking about millions and all that. With this upset, we might see that upset, and then after that recovery back again. So what this actually means is for the Aussie dollar, we might see some movements coming around. But with the Aussie dollar, what else is there to look out for? Let me bring that back. Looking at what we could have this week, we've had the retail sales number today for the Aussie dollar, a bit of a miss, but not too bad, 1.3 compared to the 1.4% retail sales number month on month for the Aussie dollar. Tomorrow, new home sales, not going to move prices too much. In terms of the US, we have some job openings, not going to do too much here. Not a lot of news happening for the Aussie dollar. As we look, we have some CPI news. So US core CPI numbers expected to stay at 0.3%. Monthly CPI numbers 0.2 from a previous of 0.6. So that might be something to look out for on Wednesday night with the CPI numbers. And then on Thursday, again, not too much. And Friday, some consumer sentiment, expecting a good number again, probably because of all that stimulus checks that has been going out to the American citizens. So with all that said, what you should notice here is that there's not a lot of news for the Aussie dollar, not a lot of news for the US dollar or the Kiwi dollar. With that, this actually might play in good stead for what you're looking out in terms of the charts. So here, looking at the Aussie dollar on the H4 time frame, the last time we spoke about it, I was saying that if it breaks above that 7741 level, we could see it go towards 7836. And it tried to break, came back down. Second time it went and hit that 7836 resistance level. At this point right now, with the way the price action is moving, with the way the previous news is going, what I might actually think is going to happen is for the Aussie dollar to sit quite quietly, test this 7836 level. I think it will probably break below slightly before we see it resume its upwards trajectory. So back up towards that direction. So what you should be looking out for is if it does come back down, don't do anything. Look for it to go back up above 7855. You're looking at a 30 pip stop loss for a good 90 pip take profit level. So I'll move this line up to about 7855, 30 pip stop loss, 90 pip take profit level, back up towards that 7950 level. So if it does come down, if it does come back into this range, this could be a trade that you want to manage very closely, but I'll be more tempted to look for that upward direction towards 7950. That's the Aussie dollar on the H4 time frame. A little bit tricky for the Aussie dollar at this point, but the New Zealand dollar is going to look a lot more attractive in terms of a trade opportunity. We've seen it hit this 7293 level a week ago, and straight away it's come back down. Right now it's back at the 7293 resistance. What I anticipate is a bigger pullback than the Aussie dollar. So I anticipate this to actually come back down towards the 7225 support level. This might be a trade opportunity you want to look out for, where you're looking 30 pip stop loss for 40 pip take profit level, 1:1 risk reward ratio towards the downside, but bearing in mind that there's still that upward move. So for every down move on the Kiwi dollar, what you might be looking for is buying opportunities. So look to buy at the 7225 support back upwards, or if it fails to turn down at this point, look for it to break above 7293 towards the 74 resistance level. That is going to be that better trade opportunity as you look 7305, 30 pip stop loss for a good almost 100 pip take profit level towards 7400. So quite straightforward for the Kiwi dollar, a little bit more tricky on the Aussie dollar. I think there are going to be a lot more trade opportunities coming up across the rest of the week as we see that lack of news, probably a bit more trending opportunities with across the US dollar charts.
Okay, thank you for that, Jin. So, yeah, just a reminder, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so right now, let's get Daniel here. Daniel from trading coach from LCMS Traders to share a little bit about how LCMS Traders can help traders trade better. Daniel.
Hey, thanks, Jinwei. Okay, so a lot of people are asking about, hey, how I have no time to pray, no time to what should I do, before I even look at the charts and how do I prepare myself? Now, one thing I would like to highlight to everyone in the Traders Club, okay, one thing about in the Traders Club here is that we have every morning. We have two information that you can actually help ease your planning in how to prepare the trades. The first of all is the daily currency analysis. So every morning in the daily currency analysis, it gives you a summary of what happened yesterday or last week and what to look out for with a current trading opportunities here. So if you look at it, for example, New Zealand, USD, we talk about what is happening. Happened like New Zealand inflation expectation happened last Friday. What happened? We look for where is the chart right now in the morning and what possible trade opportunities we could do. Okay, so that all these for many of you, for a couple of trades pairs here, we do take a look. Now, not only that, we have the currency watch list. If you see the currency watch list here right now, this currency watch list is a snapshot of what we also see in the morning in the charts, gives you a suggestion idea on what to buy or to sell, what kind of action to buy or sell, and which currency at which suggested entry price and a potential profit target. So something for you to prepare. These are very useful information that can prepare off to start off your daily trading needs, right, and preparation. So not only that, just the end of is that in the Traders Club, we have twice sessions a week, a coaching session on Monday, a group coaching on Monday, where we will talk about anything. You got any questions? Any members have any questions? We will help you. We will also take a look at what happened in the market coming week in the market to see what to prepare for. And also on Wednesdays, a live trading sessions where this actually the trading sessions will guide you what is the market condition at that point in time. How do we trade? We can trade together and literally make profits together. So this is really how you could prepare yourself and how LCMS Traders can, one of the ways that LCMS Traders can help all the members here. Jinwei.
Okay, thanks for that, Daniel. So yeah, we've come to the end of the session today. We'll see you guys tomorrow for the Euro currency call. Thank you so much for your time and goodbye.